The following podcast is a mass media production.
Hi, I'm Josh Galindo.
And I'm Krystal Galindo. Welcome to the Going Galindo Rugrats and Renovations podcast.
A lifestyle podcast where we will offer our experience and expertise in building real, lasting wealth through renovating and flipping homes.
And the chaos that comes with balancing a family of 6, leaving nothing unsaid.
Follow our wild ride we call life and apply our lessons to your own journey.
All right, good morning.
Good morning.
How are you today?
Today I'm good.
I feel pretty good today, too. That's fantastic. Health is good?
Yeah.
Energy's good?
Yeah.
Mind's right?
Yesterday I was tired, but I feel like I did Saturday, Sunday. I feel pretty good.
All the kids are still alive?
Yeah.
We're winning.
I know.
We are winning.
Well, I don't know about Kinsley and Jagger. Their Anthel took them to my mom's today.
I'm sure they're fine.
Yeah, I'm sure they're fine.
Yeah, we're definitely winning. I always tell Beckham I have one job. I actually start asking him now that he's memorized it, what is my job? What is my one job? And he says, to get me to 18. I said, just so support me in that, buddy. Can you just support me in that one? Hey, guys, we're going to pause this episode really quick so that we can hear from our sponsors.
All right, guys, I know you've all heard of Moon Valley Nurseries. Well, now is the best time to plant everything, and Moon Valley Nurseries has everything to plant. Right now, you can get 50% off plus free planting. Moon Valley Nurseries is the largest box tree grower in America, and they've brought in millions of dollars of inventory just for this event. From their farms to your yard, nobody does it better. So stop in now for the biggest and best selection. For the best trees on earth, go straight to the moon. Head to moonvalleynurseries.com to learn more.
Adulting is hard. You know what shouldn't be hard? Buying a house. Robert Coomer is a stand-up guy that does what he says he's going to do. He's helped us and our friends buy and refinance houses for the past 15 years or so. Every time we know we're getting the best service possible and the person on the other end of that phone call has a smile on their face. And that leaves a smile on ours. So call Robert Coomer. He does all the heavy lifting for you so you can worry about the more important things. Like what kind of wine pairs well with leftover pizza? Seriously, give him and his team a call at 702-850-2000. You won't regret it. So our guest today is Ronnie Withaeger.
Yeah.
He
taught us a lot on the last episode. Which one was it? Season 1?
Season 1, episode 10, Ronnie?
10.
Yeah,
Yep.
episode 10. But you know how many people said it was their favorite podcast?
Oh, yeah, everybody
It
did.
was really crazy. Like, people were like, I loved the tax guy.
Yeah, they did.
Like,
They really did.
So huge compliment to you, Ronnie.
Everybody loves the tax guy
I know.
when they're saving you
Yeah,
money.
when they're
Right.
saving money. Yeah, when it's the other way, I don't know.
No, that was good. So welcome back, Ronnie.
Thanks for having me again.
Of
We're
course.
happy
This
to
is great.
have you.
I just want to rattle off a few things because I think it's good to hear. So we have officially switched all of our tax stuff over to Ronnie.
Yeah.
And then I think something that speaks volumes to the last episode, so if you didn't hear it, you should go back and listen to it, is that you've also picked up other clients too.
Sure.
From the podcast.
Absolutely.
That's
Yeah.
good. See? So I think that says something. Mm-hmm. So hopefully this podcast will reconfirm that, and Ronnie could get some more business, and everybody can be helped by his exquisite knowledge.
I know. Ever since we switched to, I'm much happier. I'm less stressed.
Oh my gosh! Actually, frankly speaking, what I love is it's like call and Ronnie answers.
Yeah.
I get that a lot.
How much people like that? You're saying?
Yeah, people call in and then they'll say like, "Hey, you actually answered," or if I can't answer for some reason, they'll be like, "You actually called back."
Yeah.
And so, I mean, I do work in an industry where there's a lot of people who are overworked and stressed out and things like that. So I get it, but you really understand the value that people appreciate, just the connection, the contact.
Yeah.
So much.
Yeah.
Because and for me, I want to save you time too. So when I call to ask a question, like I've got my question built, ready to go.
Mm-hmm.
I fire it off. You generally fire back an answer, and we could be done.
Yep.
Like it doesn't need to be a 10-minute conversation.
Right. And if it was like a month later, you'd be like, what was I calling about?
Right.
Right. So it's more efficient for everybody.
So I love that.
Good.
Thank you. Yeah. So let's roll. What do we got, Ronnie? We've got a few things here on our list. I know you got a few on yours.
Yeah, I'm ready to jump in it.
He's
give you
ready
guys
to add some value.
Yeah, I'm ready to talk about a whole slew of things today. I mean, we'll go as long as you guys want, but yeah, I thought maybe one thing that would be really good to start out with is just kind of maybe talking a little bit of process and how important it is just to be organized.
Yeah.
Good one.
And you know, this is one thing where I think a lot of people come in and they say, "Hey, I don't know anything about taxes. I don't even know where to begin." And so for me, it's always been one thing where I'm just like, let's sit down, let's lay this out, let's make sure that you understand what's required of you and what's required of me. So you kind of set some expectations and then tell people how to be really organized. People who are unorganized and tax is an afterthought and something they think about right before the deadline, they end up missing deductions. They end up coming to the table late and there's nothing you can do about going back. And we've seen that with some of the stuff that I've worked on with some of your people, with something that we'll talk more about, but having an s-corp, for example. If you have an s-corp, you have such an opportunity to reduce your self-employment tax, but if you come to me in March, I can't necessarily go back and guarantee that we can do that because there was no payroll run or just different things like that. So it's like, hey, we got to fix it going forward. So being organized is so important when it comes to this kind of stuff. And
the cost to become organized ends up paying for itself
easy
through tax savings at least.
I
think that's important because I think the big hurdle is people are like, well, I have to now hire somebody.
Yeah.
Okay. Well, the cost of that person, and then take it from there.
It will pay it for itself over and over again, and that's a lot of people don't even care about my invoices sometimes because they know they're like, it saved us so much money. To just speak to that a little bit more though, to get somebody organized, I will sit down with them and just do that. I usually don't even have an initial charge to help people get organized. So, a couple things that I'll talk about with people I think would be worth mentioning is when they'll come in, a lot of times it's like, hey, I don't know which entity I should have. Should I have an LLC? Should I have a partnership, a corporation, or something like that? So we'll kind of lay down the pros and cons of all of those different things. But once you're actually setting up the LLC, you have the LLC in place, then everybody's like, now what? Now what do I do?
Sure.
And so it's set up a business bank account. You know, if you're in real estate, it's make sure that your brokerage is sending the commission checks to your LLC and not to you. Make sure that your brokerage understands that the 1099 is going to be cut to your entity with the EIN and not you personally.
Right.
So that doesn't create problems with taxes. Have somebody that's going to keep your bookkeeping, or you're going to keep your bookkeeping, but have an idea of how you want to approach those types of things. So, there's some of that stuff that we'll lay in and then kind of try to teach them, this is the type of stuff that you should be swiping your business card for to expense certain things instead of doing it personally. So then everything that you're spending money on business-wise is all captured within your bank statements. So even if bookkeeping's not really your thing and you're looking at it after the fact, it's like, okay, well, we can download all the statements, go through the statements, create the books, and at least I know that you've captured everything, as opposed to somebody who will come to me and say, well, here's my business account. Here's my personal account. I'm going to go through and highlight, everything that was business. I get that stuff sometimes, and I'm like, let's just stay organized.
Just let me do it, or just stick to one account.
Is that something that you offer in-house? Not obviously giving the instructions on how to become organized is something you just mentioned that you do at no cost, which is a huge value.
Depending.
But do you? Yeah, exactly. Depending.
If somebody is unorganized, it's almost like, well, how unorganized are you? And then if it's going to be something that's going to take me a lot of time, then I'll try to help somebody with maybe connect them with a bookkeeper.
That's what I thought it was. That's what I wanted you to say. So you can connect people with the resources to get organized.
Yeah.
That was my point.
I'll do that because I'm like, you don't want me to sit here and do this. Because if I sat here and do it, the billable rate's ridiculous.
Yeah.
And totally. I think it's it's in their favor to use somebody that you refer, because that means it's somebody doing it like you would do it.
Yeah.
So it's keeping it in-house. That's smart.
Yeah.
So another thing that's really good with being organized and kind of being on the ball is just coming in and doing that year-end planning. doing that year-end planning is really important because it allows us to kind of get a snapshot of what's going on and then plan for what's going to happen next. So if somebody has a big tax bill, then you can address it and you can say, hey, well, let me give you these 5 or 10 ideas of things that you can do before the end of the year to try to reduce that liability. Or if it's like, hey, we can't really reduce the liability, at least somebody has 3 or 4 months to save up for it.
Now let's what I want to do is I want to be the guy that jumps in here and there, because you two are definitely speaking the same language.
Yep.
And I have a general understanding of the language you're speaking. But where I think the listener that may not, I want to jump in and say, wait a second, because when you're saying liability, I understand that you're referring to a tax bill, a bill you have to pay to the IRS.
Okay.
A liability to the average guy is he's already lost. He doesn't even know, what do you mean liability? So what you were just saying is that what you want to try to do is ensure there's enough time to make decisions, pay for, change things if necessary, so that when the tax bill does come, you're prepared to pay it.
They know what to expect.
Or know what to expect or negotiate it.
Yeah. That's it. Yeah. So that part of it is really important, and that's where the continued relationship kind of comes in. So in my firm, after October 15th passes, the next day I'm sending something out to everybody in my client list saying, hey, schedule year-end planning with me. And a lot of times I don't charge for that either.
That's a very valuable service.
It is.
I'll say we did it and we didn't get charged for it.
Really? Send us a bill, Ronnie. No, that's good, man. That's great. And I think that's really important. Let's bang on that for a second so people understand because I didn't understand what it was. I remember getting a bill and knowing that the person behind the scenes did a bunch of stuff. Actually, I didn't know she was doing a bunch of stuff, but I thought it was more of a, let's sit down and talk about it. And that never happened. But then the taxes got processed, and I remember questioning that bill going, what did you do? And she's like, oh, let me just tell you. Because there's a lot of stuff that you do on your end to get things right, and obviously you have questions, then you do sit down and talk to the client.
Sure.
But year-end tax planning allows you, while you're still in, and I want you to correct me anywhere I'm wrong or add to, it allows you, as the taxpayer, to make moves before that year is over. So that's why you said in October.
Yep.
So if 2021, in October, Krystal, myself, and Ronnie are going to sit down and go, okay, how did the year look? What can we do to reduce our tax liability or tax bill? What can we do? What can we write off? What can we not write off? Did we pay ourselves correctly? Do we have our W-2 income lined up? This or that? Or what can we get creative with so that we still have a few months left in the year to make those changes? Because after January 1st, that's it?
December 31st.
Once the year is over, for the most part. I mean, some retirement contributions will let you go into the next year, but for the most part, your flexibility is done.
Your flexibility. Well said. Yeah, you give yourself that few months for flexibility.
Yeah, for sure. I'll just share one example. We had a good personal injury attorney up in Washington, had a huge year, and we were sitting there and we're like, what can we do? He ended up prepaying $1 million in advertising because he's like, I pay advertising every year. We prepaid the advertising. He saved $370,000 on his taxes because he prepaid the money.
Right.
And that's just, not everybody's going to spend.
Right.
They might not all do that, but he was in a position where he's like, hey, I got a lot of cash right now, so I'm just going to do it.
Let me ask you this, Ronnie. When I hear you say that, because I've heard that trick before, prepay everything in the year so you can write it off.
Yeah.
Does that reduce your ability to write it off next? Obviously, does it really change anything? I get it, but does it really change anything if next year?
It's a deferral strategy.
It's a defer. Okay.
Yeah.
It's
So
deferment.
it just kind of pushes it out.
Yeah. Okay.
So, eventually he's not going to have $1 million of advertising to write off. But if he every year does this, and that's just what he does, then he's pushed off that tax burden one year every single time.
Okay.
So,
I make that same logic. If we close the houses in December, I'm like, don't cut the check till January.
Yeah.
We're just kicking the can down the road.
yeah, it could go the other way too, though. Like 2020 was a bad year for a lot of people. So 2020, that idea, nobody did that idea. Everybody was like, well, I want to recognize revenue now.
Yeah.
I want to recognize revenue in a low year, and then I'll save my expenses for when everything's rocking and rolling next year.
When you make more money in the following
Interesting.
year.
So,
So-
strategy. Yeah.
Yeah. So you got to
like
think that way too.
Okay. Good. Keep rolling. What else you got?
All right. So part of that, I would just say, is you want to work with somebody too that's going to be making sure that you're staying compliant on stuff. One thing we did together was the 1099 prep. That was something that was due at the end of January.
Yeah.
And if you're not really proactive about asking for it, it's not going to get done.
No.
And a lot of people are thinking with their something like 1099 prep, well, hey, I'll just file them later when they come. And the IRS isn't very strict about penalties on those things, but so a lot of times people do file them late. But that's one of those things where it's like, from a audit perspective, let's say, IRS, that's what everybody's afraid of, right? Nobody wants to get audited or anything like that. So, in our process that we have with our group is we're always doing things that are going to make sure that people are staying away from those red flags. That their situation is kind of audit proof. And so, I want to make sure that from a compliance standpoint that we're always filing 1099s on time. If we're extending, we file extensions on time. If you have stuff like payroll in your business that we're tying out to your W-3, because that's what gets reported to the IRS. So we have a process in place where we're always making sure, okay, your bank's reconciliations tie out, your loan balances tie out, your payroll ties out, because that's all the stuff that the IRS is going to come look at.
And that's easy to catch, those items.
It is. It's just, and when I'm going through my process, it's just us checking it. And, we talked a little bit about bookkeeping. A lot of people don't know how to reconcile their bank account.
Right.
They have no idea. And
before we jump down that road, I got to stop you because I don't want to get off the 1099 thing. I think this is a good question.
Okay.
Why is it? I think it's a great question. I know the answer. Why is it beneficial to 1099 people?
So that you can claim the expense.
Can you elaborate a little bit more?
Yeah.
Like, let's give an example.
Yeah.
Give me an example, because a lot of these guys are starting to flip their first flips, right?
Okay.
They're kind of subbing out all the stuff. To different people.
This happens all the time.
Yeah.
Okay?
This guy put on the tent for $500, and then another guy on a window. Then another guy did landscaping for $1,000, and so explain why it's a value to keep track of those things and issue a 1099.
Okay, so you buy a property, and then what's most likely going to happen is you're going to go find the cheapest people that are going to be able to get these jobs done for you.
Yep.
And a lot of people may have a social security number, may not want a 1099, but you're just trying to get the job done. So you're out and you're like, yeah, I'll hire you $1,000 to do this, $1,000 to do that. And what happens is at the end, you're like, well, yeah, I paid these guys cash and I did this and that. I don't have their social security numbers or their address. I don't even know who he is. And you're not really supposed to deduct it if you don't do that. I mean, people...
Well, not only you're not supposed to, but if you did get in trouble with the IRS, they wouldn't give that to you.
No way.
No.
That's what I want. Let's create the real life consequence.
Yeah. So
you don't get to write that off.
Yeah. I mean, I think in practice, a lot of people write it off anyways and just wait for the IRS to come challenge them on it. I would say that happens quite a bit. But if they audited you, they would never give you that expense.
Right. No.
So let's create an example. Let's say I bought a house for $100,000. I put $25,000 in labor into it. Let's say that $10,000 of it I 1099, and the other $15,000 was all cash, guys. And then I made $25,000. I made $20,000 on the house for easy math. So I'm into it for $125,000. I made $20,000. Only $10,000 of it is 1099. That I can actually prove that I paid somebody that $10,000.
Yeah.
So in my mind, I think I made $20,000.
Yeah.
So I only pay taxes on $20,000.
Right.
The IRS audits me. They go, I want to see all of the paperwork here, and you can't provide the 1099s for that $15,000 we talked about.
Yeah.
So now you have to pay taxes.
They're disallowing the expense. You're paying the tax. Then they're tacking on interest and penalties because it's going to happen 2 years later when they audit you. And then on top of that, they're going to say...
And the interest and penalties start from the point of action?
Yeah. Well, so they'll go back, it's 2 years worth of penalties. And then what they'll do is they'll be like, you were negligent in this.
Yeah,
and
then
so
you get in
now we're going to
trouble.
have a substantial... The tack on, instead of it being like 1% a month or something like that, then they end up tacking on the big negligence penalty. And all of a sudden you owe like another $10,000.
Yeah, and it looks like you made 35 on a house when you did.
See, and what we're describing here is this is called turning the flipping business into a business.
A business, yeah.
You know, there's I'm a flipper, and you're just free don't know, there's probably a better term for it. You're free balling. I mean, there's if you want to be considered a real business, these are the ways to do it.
There's
and
a
that's
hobby,
why you got to have
and
a
then
Ronnie.
there's a business.
There's a hobby, and then there's a business. And what we're talking about is how to make it a business.
And there's a lot of people out there that are just willing to take your money and file a tax return for you, and they'll let you go on your way. But it's one of those things where it's like, if you care about people, right, then you want to teach them how to do it the right way. And you want them to understand what they're not doing and what their limitations are, so that if they ever do get audited, and I realize the chances of being audited are pretty small, and some people just roll the dice on that kind of thing. But if you're really people focused and you want to train them, you want to help them, and you want businesses running effectively.
Yeah.
Yeah.
So.
Yeah. Yeah, and even if it is a gamble, because I think there's probably a lot of guys listening that it's a calculated risk.
Yeah.
But if you're going to take the risk, you at least want to know the details of the type of risk you're taking.
Yeah.
Right.
So I get
Know
it.
what the worst case scenario is.
Yeah.
And I've had situations too where people are trying to cut those corners, and then somebody like me who cares and wants to teach people to do it the right way, I just won't work with them. I mean, like, I'll just say, hey, it's probably best if you find somebody else.
Well, yeah,
Yeah.
because you don't want to do anything to your name with
Yeah.
IRS, because you're the one that has to handle it if
Right.
IRS comes after them.
Oh,
And
yeah.
that's not, yeah.
We're
yeah.
they make us the police.
Yeah,
They scare us.
so you're like, I'm not willing to do that.
Yeah.
Yeah. So are you a licensed? You're licensed?
Yeah, I'm a CPA.
And that's like a state. These are obvious questions, but I'm just asking them. So to become a CPA,
Yeah.
you have to, just like becoming an attorney, you have to take a test at the bar
Yeah,
with the state. You pass it. Becoming a real estate, you have to take a test with the state, and you pass it.
Yeah.
Yeah. So you have a license that you have to care about.
Yeah.
Yeah.
It's,
That was
it's
my
a
point.
national test. 4
it's a
parts.
national
Yeah,
test.
it's a national test. 4 parts. You got to go get 150 credit hours in university. You have to have a couple years of experience before you can't just pass the test. You got to have a couple years of experience, have another CPA sign off for you. And so, there's a state board and all that sort of stuff. So,
Cool.
Yeah,
You have to qualify.
I'm not trying to mess with that.
Yeah. Right. That was kind of what I was getting at. Is it's bigger than just one client.
Yeah.
It's about your license, which is your livelihood.
It is.
Yeah. So you're in planning, and that was a good question that popped in my mind. Why is it beneficial to 1099 people?
Yeah.
So,
No, that was good. That is really good to kind of talk through that and help people understand it, because that's really common in real estate. Hey, I just paid a guy. Now remember, one thing I guess worth saying is you have to pay more than $600 to somebody.
Right. Thanks for
So
bringing
if it's
that up.
under
Yeah.
$600, then you really, as long as you have a check or some kind of receipt, then that's good. But a lot of people in this business are peddling cash on stuff. And they're just trying to.
When
Totally.
they ask for cash, I'm like, nope.
My first flip, man, it was probably 80% cash.
Yeah.
I was, peeling off money to give it to them. They didn't have bank accounts. They didn't, so you had to pay them cash.
Yeah.
Let me ask you this, and I think that this, obviously we run into this problem. The guy walks in and goes, I don't have a social security number. Mm-hmm. And you go, well, write down whatever you want.
So
Who does that?
I'm not saying that happens often
Okay.
for us,
That
but I
will
feel like
happen.
it's like that's not our issue, correct?
Well,
We-
it can be. It can become your issue. So in that scenario, which that is something that does happen. Now you're always going to have, anytime you have a contract, you'd have them fill out that W-9.
Yeah, I do.
All right. So if somebody's unwilling to fill that out, then it's like, well, we're not going to use you.
I'm sorry, I messed up there. I want to make sure I'm clear.
Yeah.
So when you're gathering the information, the form is the W-9.
Yeah.
And
Yes.
then once you have the W-9, at the end of the year, you issue a 1099
Correct.
based on the W-9 information.
Yeah. So just to speak to that, though, if you issued a 1099 to the wrong social, or there was no social, but you still wanted to issue your 1099 so that there was a paper trail, you'd get a notice from the IRS saying, hey, this isn't the right information, or you're missing a social security number. And if you're ever going to pay this contractor again, you have to withhold 28% on their behalf.
No way.
Yeah.
We've gotten those.
I remember
before.
getting
Yeah.
that.
Yeah.
I mean, I remember getting the letter. I didn't know about the 28%.
I was like,
though.
we're not using them again. Nope.
Exactly. Yeah, that's what you wanted.
Good tips. See, these are valuable tips.
Yeah.
Those are tips that these guys can take and use today.
Yeah. Okay, we're going to take a quick pause to shout out a few of our sponsors.
Hey guys, if you're looking for some family fun, I know I always am, check out Circus Hotel and Casino. At Circus, there is something for everyone. Have a blast inside the Adventure Dome, a 5-acre indoor theme park with 25 rides, or act like a kid again at the Midway playing arcade games or enjoying their daily free circus acts. Looking for a special date night? Look no further than their award-winning restaurant called The Steakhouse. Voted best steakhouse in Las Vegas, Circus offers affordable room rates starting at $25 per night. Book your stay today at circuscircus.com.
Hey guys, if you're looking for a jeweler you can trust for all of your jewelry needs, the Jewelers of Las Vegas is the place to go. They have the largest selection of diamonds, engagement rings, and jewelry in Las Vegas, and they carry luxury watch brands. The Jewelers of Las Vegas has been Nevada's most trusted jeweler since 1976. They are family-owned and operated, and they are dedicated to giving the best customer service. They specialize in custom design, and I love that they have their own manufacturing facility on site here in Vegas, so they do everything here. Most importantly, they will always take care of you. You can go to their website, www.thejewelers.com, or call or text 702-382-1234 for more information or to see their locations. When you go, take Josh with you. I think that we talked a lot about real estate stuff, and I think it would be good to touch on, like, just for, like, the common people that maybe haven't started their business yet, like, good, like, tax hacks, and maybe is there any changes with the new administration that maybe they should be aware of tax-wise?
So the changes haven't come yet.
Okay.
They're coming.
Okay.
There'll be stuff that we'll find out about later on this year. There were some changes that were frustrating. I mean, they extended the deadline.
Right.
And, there's a lot of stuff with these PPP loans and credits. And unemployment, too, is another thing. If people are listening, if they got unemployment, the first $10,200 of unemployment became non-taxable about 3 weeks ago. So that was kind of like crazy. I hadn't had that happen before where they just like up and changed the tax law in the middle of tax season.
Right.
When like millions of returns have already been filed.
Yeah, I was going to say, what do you do if you've already filed?
Gosh,
yeah, so what they said is the IRS is going to work it out. But like we're all sitting here like, okay, we'll love to see
Does
how
that mean
goes.
they won't have time to audit anybody?
Maybe. Yeah.
So if you got unemployment, does that check come with taxes already deducted?
Sometimes. Just depends how you set it up. Yeah.
What would you say the majority is?
I'm seeing about half and half. Some people had tax withheld, some people didn't.
That's pretty big information. That's a pretty big decision.
Yeah.
What does that mean? If you didn't have any tax withheld from that unemployment check,
People are getting a little bit of a surprise. They're getting a tax bill.
they're getting a tax bill.
Yeah. Yeah.
Wow.
Yeah, so that's been a little
I'm sure
interesting.
that's.
But the changes will come as the year goes on.
Okay.
We'll see the Biden administration probably set their feet in. You've heard some rumors of some stuff.
Right.
Capital gains tax going up. You've heard probably the corporate tax possibly going up from 21 to 28%. So
Can you give me an education on that?
the corporate tax?
Yeah. So Galindo Group Real Estate. Let's use me because you hear this big thing, and obviously that sounds scary and big. How does that affect my entities and then me?
Not at all.
That's what that was my understanding.
Yeah, and realistically, for most
So
small
who's that
businesses,
actually affecting?
That's like the big companies. They're the C corporations. So you guys got S-corps and a lot of people who do real estate, small business like myself. I'm an S-corp. A lot of us are in small business, are doing partnerships and S-corps. The bigger businesses are C-corps. So when you hear the 21 to 28%, they're talking about the Amazons and all the publicly traded companies and things like that. Now, that's kind of how that works. But as you guys know, there's so many ways to manipulate this stuff.
Absolutely.
It doesn't matter what the number is.
I'm actually graduating into that mindset.
Yeah.
Obviously I used to, before I understood business more, I was like, no more don't tax hikes. I don't want to pay more in taxes. Oh, the government's wasting my tax money. Mm-hmm. Even if taxes go up 5%, which is usually what they do, they're like 5 to 7% anytime they move that number, right?
Yeah.
Any of the numbers, the blended personal income or the capital gains tax, or now we're talking about the corporate tax. And it's like you're talking about like very little money, arguably. Like if you make $100,000, it goes up 5%, it's $5,000. Yeah. And then there's probably a pretty easy way with a Ronnie in your corner to find a way to get rid of that $5,000. So to get so riled up and worked up over those types of things, I don't know. I'm starting not to care so much about what the politicians say about taxes.
You're loosening up, man. You're not holding the line.
Well, I mean, but am I wrong to say that? I mean, you can't tell me I'm wrong to say that. I mean, if it goes up 5% on me personally, you don't think you can find a way to navigate that?
There would be some ways, yeah. I mean, but it may involve you spending some money to do it, because in order to get a tax deduction, you have to spend money to get it. Mm-hmm. So that's part of it. I mean, if you just simply anytime they raise taxes, I'm like, no, don't do that.
Well, I don't want that either. I just don't know if if I'm willing to get as emotionally charged by it as much anymore. Yeah. But maybe.
Well, that's good. Maybe you're like for stress and all that kind of stuff.
Ronnie,
turning a new page here. So.
All right. Biden, you said it's coming down the line. We don't know yet. Corporate tax, I'm glad that we talked about that because that's what's in the headlines, and people don't understand that there's a difference between...
There is a difference between corporate tax and personal tax.
Has there been any rumblings about personal tax?
For high income, there has. So if you're over 400...
Over 400.
Yeah, if people are over 400, there's probably some increases coming. And for some people, to speak to your point, if somebody's... making $500,000 a year, $1 million a year or something like that. I mean, if they see a 2% increase, I mean, it's a good chunk of money, but they may not feel it as much.
That was my point.
Yeah. And so...
And I don't know if that's perceived one way or the other, but that was kind of my point. It's like, I'm going to picket and march and Facebook post and Instagram post.
I would just say it's out of your control.
And it's out of my control.
And
yeah. And I got Ronnie, so that's all.
Yeah, you just got to be prepared for it with Ronnie.
So a lot of people that have come to me from you guys, they haven't had s-corps.
I was just look at my question here. When will it be necessary to get an LLC? So as you're starting in the business.
Yeah. So I want everybody to understand an LLC can be anything. It can be a sole proprietorship. It could be a partnership. It could be an s-corp, or it can be a c-corp. So an LLC can be anything. But we talked a little bit about some of the people that have come my way, and I know this in small business. There's so many people who need this, but when you want to get an s-corp is typically when you're netting more than $40,000 a year.
Good number.
Okay, that's a
I was
good
wrong when I remember you were citing the other number. So it's lower than I thought. I was thinking between like 65 and 80 is probably when it went.
I think 40 is a good line in the sand. From what I've seen.
So if you anticipate to make around 40 plus, it's probably time to get legit.
Yeah.
Okay.
Yeah, you definitely want to if you want to save taxes. I mean, some people choose simplicity over, and will just pay a little more. But yeah, for me, and I say 40 is kind of that baseline. But sometimes I've had people who are, hey, I'm unsure if I should do it, and because they're kind of on the cusp. And then they don't do it, and then they come back a year later, and they're like, I had a crazy year, and I made 100.
Right.
What can we do?
Right.
And I'm like, nothing.
I think that's the lesson there.
Yeah, there's a lesson there.
Yeah, the 40, because you don't realize what's going to happen. So
Build it. To me, I've always been, if you're on the fence, build it, and they'll come. Like just believe in yourself and invest in yourself. And let's go for it.
It almost pushes you to do more.
Yeah, it's a manifestation of your future. I anticipate making this amount of money.
I've had that happen quite a bit.
Yeah.
But yeah, 3 or 4 people that I've talked to with you guys, though, they're like, talk to me about this s-corp. How can I save in self-employment tax? That's the biggest piece of it. Is self-employment tax is Social Security and Medicare. And when you're an employee, you don't really think about it that much.
Right.
7.5% comes out of your check, and that's just you paying into it. But what people don't realize is the other 7.6% is being paid by the business. Mm-hmm. So when you're self-employed, you're the business and the person. So now all of a sudden you're paying on top of your regular tax, you're paying another 15.3%.
Yeah.
And people usually aren't paying taxes throughout the year on that money, so they're getting crushed when they show up for tax time, and they're like, why am I paying so much? And so I've like built my practice off of implementing this for people.
Sure.
They need it.
When you do an LLC, tell me if I'm wrong, when you're like creating your LLC, to make it an S-corp, it doesn't make any difference, like financially.
It's just a choice,
it doesn't cost any different, does it?
Well, there's a little bit of cost associated to it. That's why I say 40,000 is kind of that line in the sand where you want to do that, because you're going to have a separate tax return for your S-corp.
Well, yeah, but to create it.
To create it?
Yeah,
It's
No,
it's a choice,
it's a
right?
choice.
Well,
It's like
there's a form you have to send in, but
Okay.
it's like a little 2-pager where you just fill in the information for the business. It's really easy. So
so it's simple to create it.
simple to create it, but
Yeah.
I don't know why the IRS doesn't tighten up, what they do on this, but they make us send in a separate form. And a lot of times when people set up an LLC with an attorney, I mean, they should have that nailed down, but a lot of times they don't make the S-election form. And so then all of a sudden you're sitting there and you're like, well, I don't know. I thought that guy was setting me up the way I should be, but I'm not.
Right.
And now I'm getting hosed.
Yeah.
Yeah.
So what I wanted to say there, 20 seconds ago, I think the way Ronnie just described the tax that you're now paying when you become a 1099 income
Yes.
generator, you're paying the employee tax and the employer tax. I won't repeat it. I just think that was really valuable for people that don't understand the S-corp. And
Yeah.
I'm a public service announcement. Go back and listen to that again.
Yeah.
Hey, I want to take a minute to tell you about one of our sponsors, Nick Marietta at Southwestern Custom Construction. Nick does it all. He's got a construction company, a wholesale business, and a flipping business. He's someone you can count on, and the best part is there's really no job too big or too small for him. Nick is your guy if you need help with a full, complete flip or just a small renovation project. You can reach Nick at 480-235-8148 or find him on Facebook and or Instagram at The Real Nick Marietta.
So let's talk about why that's so valuable. Because I remember when I was moving up, I remember sitting down in front of my tax lady, and I think she said $5,000. I don't even know. I want to say 10. I just don't think I would have ever stomached 10. But I remember she said she gave me a bill. Josh, it's time to get an S-corp, and this is what it's going to cost to get it all done and up and running and going in your first year's tax return. And I remember thinking, maybe it was less. You know what? It was less. It was like $1,500, but she told me the savings was going to be about $10,000.
Yeah.
And I remember thinking, like, that's a ton of money to save. So let's play a scenario for just a moment so that people, when they do decide to go first of all, let's push them off the edge is kind of what I want to do.
Yeah.
So if you're sitting here going, I don't want to spend the money, because sometimes people get cheap. It's our moment to go, let's push them off the edge and go do it, because you're going to save money. So if you make $100,000 and you don't have an S-corp, and let's just use general write-offs for this conversation, what kind of savings? Build a scenario for us with $100,000.
Let's say you netted $100,000.
Okay.
Okay. And you would pay about $35,000 in taxes, $20,000 in regular taxes, $15,000 in self-employment tax.
Okay.
All right. So, and that's just if you went on your Schedule C, file it on your personal return. That's what you're looking at. Now, let's say you're like, hey, I'm going to meet with Ronnie. Let's do the S-corp. Okay. What ends up happening is I'll say, all right, instead of making 100 just as a sole proprietorship, you're still going to make 100, but you're going to pay yourself a wage of $50,000. So now you have this W-2 income, $50,000, and then your business income's the other $50,000. Now, what happens with that 50 is you pay self-employment tax, the 15% on the 50 of W-2 income, not all 100 of it. So what you've done is instead of paying $15,000 in self-employment tax, you pay $7,500.
So right there,
Right there,
$7,500
you say
savings.
$7,500
In year one.
Easy. Now, the reason I always say the 40,000 is the line in the sand, because if I said, well, what's the costs that are associated with implementing this? You're going to spend, you're going to get probably $400 to set it all up, a couple $100 to set it all up, and then you're going to probably spend a little bit on bookkeeping. You're going to have a tax return that's probably going to cost you $500 to $700.
Which you'd have
like
to pay for a tax return anyway.
No, he's saying that you'll have to file it on the S-corp now.
Another tax
versus a person.
Gotcha.
Yeah, so you have two
But
tax returns.
good point to point out.
Yeah, so you have two tax returns now, and then you got to set up payroll, and payroll's like $125 a quarter.
Yeah.
So there's $1,500 worth of expenses, or something along those lines, plus a little bit more stuff that you have to think about and worry about. So on $100,000, it totally makes sense. Yeah, I want to save $6,000,
Sure.
even after everything.
Yeah.
But if you only made $30,000,
Right.
the savings isn't really there.
And does that same analogy, let's say you make $1 million, Do you generate a W-2 at $500,000?
So it's going to cap out because your Social Security only kind of is the 6.2% goes up to like 134,000. So like this is when you kind of get into like that let's say you're making 250 plus. Mm-hmm. I mean, you're still going to save some because Medicare doesn't have a cap. But the real kind of sweet spot for the S-corp, I would say, is for people that are making anywhere between 40 and 200 grand.
Good to know.
You're still going to have an S-corp if you make more than that, but you're not going to like exponentiate your savings.
The savings don't keep going; they cap. Okay,
Yeah,
they dilute.
Yeah,
I have a question. Is there, as far as write-offs go, is there more write-offs that you can write off having an S-corp versus just an LLC?
Some
or
stuff.
Stuff?
Yeah, some stuff.
So there's a little bit more opportunity
There's
there?
some more opportunity with that kind of stuff. And then you have a lot less risk of being audited. Okay? So one thing.
That's huge.
Yeah, that's
because we've been audited. It's not fun.
Yeah, a Schedule C, like a sole proprietorship, gets audited 10 times more often than an S-corp does. So
wow.
There's legitimacy there. People, you're probably working with somebody, so the IRS picks on the people that aren't. And they,
they have quotas.
I feel like you want to say that again.
You know that, right?
Yeah.
When we got audited, this guy's like, I got to hit 40 grand a month this month.
Really?
So here's write me a check for $1,800, and I'm out of your hair, so I can get down to the road to the next guy.
It's like
because how do they incentivize these guys?
Yeah, that's like third world country-esque. Like the government came in and you just got to give them your cut to get them off your back.
How crazy is this, Ronnie? I was speculating this not speculating. I was pondering or thinking.
Yeah.
The United States has set the system up where you don't get to get a loan to purchase a home, the American dream, unless you pay taxes. Think about that for just a moment, right?
Yeah.
Okay, so I go to the lender. Hey, I want to get a loan. They're like, excellent. We want to give you a loan. We need to see your 2 years tax returns, and I need to see taxed income on there.
Yep.
Not this cash stuff. I need to make sure you've paid taxes on the income.
I've had people
think how crazy that is.
That is crazy. I've had people that have all the cash to pay cash for a property in a bank account.
Yep.
And they just didn't make money for like 2 years or something. But they're already rich.
Yeah.
And they can't get a loan.
Right. Isn't that crazy? Like, if you really start thinking about what I just said, it's like, oh my God, that is like so connected.
Yeah.
The IRS is like, we're fixing this problem. You don't get anything unless you pay us our fee.
Well, and then I've had people who want to qualify for a loan, so they'll reach out to me and just be like, I may or may not have given you all the expenses. Because they want their income to look higher.
Yeah. And, just to qualify.
And I'm like, I don't want to hear about that.
You're like, don't say that.
Yeah, don't tell me this kind of stuff. But, they pay more in taxes on purpose so that they can get
the loan.
So that kind of goes along with what you're saying,
Isn't that nutty? All right, I know you got a big list. Keep going, Ronnie.
Well, you would kind of ask Krystal about, when you have the S-corp, what kind of things are people doing? Mm-hmm. And so... there are some kind of, this maybe would get into the hacks type of.
Okay.
I love the hacks.
The hacks type of
I
stuff.
think everybody loves that word.
Everybody kind of wants some of the hacks.
Yeah.
So we kind of talk about a lot of the stuff that a lot of people are going to be implementing, but then it probably takes a little bit more planning and assertiveness to like start implement some of this other stuff. But one of the things is a pay your kids type strategy.
Yes, I just sent you that.
Saw a video of that.
I sent him an email.
He sent me a video, and I was like, I'm going to talk about this.
Okay.
So, and there's a couple different ways to do this, and people try to remember the hogs always get slaughtered. Okay.
Right. Okay.
So you can't go kind of crazy on this, but everybody has a standard deduction for $12,400. Everybody. So
per kid, or just everybody as
every individual
that has a kid.
Anybody that files a tax return
gets the automatic $12,400.
They'll get a $12,000. Let's just call it $12,000.
12 grand.
Yeah.
Okay.
They'll get that standard deduction. So what a lot of people will do is they're like, well, I'm going to put my kids to work in the business, and so they might do cleaning the office or different tasks, filing paperwork, whatever task you could come up with that. Will kind of
suitable for a kid.
That would be suitable. Yeah. I mean, so, and what's great is you in your tax bracket, you might be like, well, I pay 30% taxes. you can pay your kid $12,000 to come through here and clean up, and once a week or whatever it is, and then you get a $12,000 deduction off of your income, so it saves you $4,000 in taxes, and then the kid, when you file their tax return, it's $12,000 in, $12,000 out, zero tax.
Repeat that last 8 seconds.
Okay, you pay your kid $12,000.
Got it.
Okay, W-2, they're on payroll.
All right.
For you. Okay, you get a $12,000 deduction, and then when the kid goes to file their taxes, they have $12,000 in income, and then they get their standard deduction for $12,000.
Oh, I see.
So they zero out. So you save people will save $4,000 per kid. So families like ours, this is where
we got the double thumbs up.
We got 4 kids apiece.
So how do I do that? I put them on W-2?
Yeah,
they got to they become employees.
But how do they file? You can file a tax return under 18?
Yeah. If you have income. Now, here's where I say
I guess of course you can. I've had a job when I was 15, 14. Okay.
But does Jagger
I don't remember ever paying taxes though.
This is where the hogs get slaughtered though, right? Because somebody's going to be like, "Hey, I got this 2-year-old or something," right?
He's our company mascot.
Exactly. And it's like we paid our kid
$12,000.
You paid your kid $12,000. There's people can't even make that doing real stuff or whatever.
Right.
So, it's always kind of one of those things where I'm always, as the advisor, I would be like, hey, you know what, we want there to be substantiation if they ever ask for it. They're going to have a reasonable hourly wage and things like that. So
let me ask you this. So, because that's all great and dandy, but where does the 12? Because I'm only saving $4,000 in taxes, but I'm spending $12,000 to do that. So where does the $12,000 go, and can I get it back?
So you'd put it in a lot of people put it in their kids' accounts, and what they'll do is they'll contribute to a Roth IRA with it.
So it's gone.
Yeah.
It's technically in their account.
Technically, it's in their account.
Now, if all the wheels fall off in my bus and we're down to top ramen and cheese,
you want to rip your kids'
and
accounts,
I want to rip my kids, am I allowed to go grab that money?
You can go grab the money.
Okay.
Well, you think about it, it could be towards their college funds.
That's
it could
what
be
people
towards their
do.
first car. It could be towards their wedding.
Yeah.
Well, you always want to look at worst case scenario. Those are all fluff things that, of course, all make sense and ultimately we have to pay for them. So why not pay for them with tax or money that has been
They could gift you the money back. Is how I would do it.
Yeah.
So I would say, hey, the kids are giving their parents a gift.
So let's say,
or they want to buy a car. We already paid for the car. They're buying the car from us.
Yeah, well, and then we get the tax benefits the whole time.
Krystal hit the nail on the head though on this. If you're going to do something like this consistently, then you're gonna say, hey, the stuff that we already pay for out of our personal situation anyways, we're going to make the kids do it themselves. So it's like, hey, you're going to do all your own school shopping. You're going to pay.
You know what? Okay, you get a kid credit card.
Yeah, you get,
right? You get a kid credit for all the Beckham shoes on Amazon, his soccer balls, his skateboards, his this, and then you pay that credit card from that account.
Yeah. So
handled.
Yeah.
Tax hack.
Yeah. So that's a good one. And people can do it 2 different ways though. Some people go directly out of their s-corp on it, which if you do that, you got to pay a little payroll tax.
Right.
If you wanted to, another way to do it would be to set up a separate it's like a sole proprietorship. So you do a separate Schedule C where it's like, hey, this is our cleaning business, and then it's Galindo Group pays the cleaning business, and then the cleaning business pays the kids.
Okay.
So there's a little bit more setup there, but if you do it that way, you can avoid paying the self-employment tax. So
there's another hack.
See, just a couple little things like that.
Fucking Ronnie, this guy.
So.
Okay, I had a question. How much are the tax returns per kid?
If I file a kid's return?
Yeah.
Well, if I do their parents' returns, I usually just charge like $100 or something. It's just like.
Okay.
Yeah.
And then so we all of our kids have been getting what, $100 a month? $100 a month since they were born.
Okay.
This is before we knew. This was 7 years ago.
Yeah.
I didn't know this $12,000 thing existed.
Actually, it started with 20, and I'm like, what is $20 gonna do?
Be 18
we need to do
$400.
Yeah.
Can you do anything with that money, or is that gone?
That's gone.
All right.
Yeah,
So starting this year.
Yeah, you want to start
Jagger's
paying your kids?
Is Galindo Group
Jagger-
Instagram model.
Jagger cannot be.
That is what some of them do. Is some people
logic.
post. Yeah, some people do pictures for the website and different stuff like that and compensate the kids for
It's
it.
fair. We're his managers, and he's not getting less than $12,000 for a photo.
Okay.
Hogs.
I know. I'm like, maybe it should be like
Just
half,
remember,
babe. Half.
Do the hogs. Maybe do your two oldest kids.
when you
or
say-
something
Yeah.
like that.
okay,
I would
so-
say like when they're like past 5, when they can actually understand a command to do it.
Yeah, and you can't pay them like, hey, we pay our kids $50 an hour to come clean the thing, and
It
then
has to
like
be
my
realistic.
receptionist makes,
Got it.
right,
Yeah.
whatever, right? Like,
That would be discrimination.
That would be so bad. Oh my gosh, that was funny.
All right, great talk, good hack. We'll figure out the details.
Yeah.
What else you got? Let's keep rolling.
so you use a retirement plan. I mean, this is one the real estate people probably don't like a lot.
I don't
'cause-
like it.
Yeah, I know.
Just hear
That's
you
okay.
say it.
So I'm speaking
But
to
give
some
me
of
the
the
education,
yeah,
though.
some
But
of
yeah,
the
some people do.
Some people do, and some people also self-direct their retirement plans
Mm-hmm.
and stuff like that. So it can go both ways on this. But retirement plans are a great way to reduce your taxable income and then also commit to your future. So, and people do it different ways. I mean, you can have retirement plans that create a tax deduction. You can have retirement plans that don't create a tax deduction and are tax-free in the future. Lots of flexibility on that. But, IRAs, SEP IRAs, simple IRAs, there's all kinds of different products out there that are really good for creating tax deductions. And the employees also love them too because, then they're building their stuff. But I've had a lot of clients who will implement a 401k or implement a SEP IRA, or even people that are more wealthy and things like that. They'll end up doing defined benefit plans. And defined benefit plans are basically 401ks on steroids. So, in past, I've had people who make $300,000 or $400,000, $500,000 a year, and they set up this this defined benefit plan. They can drop like $120,000 into a retirement plan, get a $40,000 tax savings on it. So
Where does that money go?
it'll go into a 401k account.
Which is invested in mutual funds and other things
Yeah,
like
it's
that.
invested in stocks.
And then you said self-directed, though.
Some people can yeah, if you
Does that
want to
allow
go.
me to buy whatever I want, invest with whatever I want?
Yeah, you got to be careful with them. There's a lot of like red tape that goes through the self-directed stuff. But
Let's play the rental game with that scenario you just described. Because those are long-term deals. Obviously, I don't think a flipping would be a great use of that. But like you said, red tape.
flipping's tough. Yeah.
Okay, so let's just say that I'm committed to whatever I buy, I'm going to keep for 5 years. Can that...
You can have rentals in a self-directed IRA.
So I could fund the self-directed IRA, but how much can you put into it in a year?
Well, in an IRA, the limits are pretty small. So it's only like $6,000 into like regular traditional IRAs.
Where's like
But
hundreds of thousands of dollars? What
You'd have to do that in the defined benefit plan.
Okay, so defined benefit plan.
Yeah, those ones are a little bit tougher to self-direct, but there's probably companies that would do it, or maybe later on you'd roll it into something else. But yeah, it's a little bit tougher on real estate people. I would say
Okay.
my real estate clientele don't like. They usually will not do this.
Okay.
So
I won't dissect it if it's not. It's a square with a circle hole.
Yeah,
Yeah,
I
you
would
don't
say
like
it's
it.
possible.
Yeah,
but
but-
a lot of real estate people are like, "Hey, my retirement is in my investments," and so I get it. So I totally understand that. But retirement plans are a really good way to defer tax, and there's also some planning that goes along with them too, because sometimes people have money that they've received a tax deduction on, but then like last year, for example, crappy year, they did conversions and converted them all over to Roths and ended up paying a little bit of tax on it, but now they have tax-free retirement money. So there is some flexibility and things that you can do with that kind of stuff, but retirement plans are really, really good. Another thing that is probably worth talking about is something called an accountable plan. So an accountable plan is going to be a document that you're going to keep with your corporate records. That's basically going to say, hey, we allow our owners to reimburse themselves for certain things that they pay for personally but are used in the business. So really common things would be, if your company doesn't own the vehicles, you own the vehicles personally and you keep track of all your business mileage. Or, hey, we use our personal cell phones for the business, but we pay for our Verizon bill personally. So, anybody can do it when they want, monthly, quarterly. I do mine annually, but, I go back through at the end of the year and I go get all my mileage. I go get all my cell phone bills. I get like my internet, a portion of my internet, and I go back through and do a reimbursement at the end of the year for those different things through the accountable plan reimbursements. Home office would be something.
Is this a formal thing, or is this?
It's a formal thing.
It's like an entity or something that.
It's not an entity. It's a plan. It's like a document. It's a document that businesses are supposed to keep on their.
What's it called again?
An accountable plan.
Okay.
So this is just, hey, Galindo Group, we reimburse our owners for car mileage, telephones, a portion of their internet, and their home office space. And so, when you come at the end of the year and you got like a $6,000 check that you write to yourself, and you're going to take a tax deduction for it, but you're not going to have to pick that up personally as income. Okay, so they're business type expenses that sometimes are paid outside of the business, but those are the kinds of things a lot of times that like me and my staff will ask for. We'll be like, hey, do you have an accountable plan? Do you know what an accountable plan is? Do you reimburse yourself? And you need to reimburse yourself. So that way there's a paper trail for it.
Right.
So,
got it. And that goes into the year-end tax planning.
That's right.
Right? That's where that little gap of time, that's where you do stuff like this.
That's right. Another good one's bonus depreciation.
We're working on that one together.
Bonus depreciation is really good.
This is on the building.
So for non-real estate people, you're looking at capital type expenditures, equipment. Well, I guess if you're a flipper or plumbers and whatever you have, if you need to buy expensive equipment, right now you get 100% write-off for it. So I'll give an example of something that we did with a doctor a couple years ago. Doctor a couple years ago ended up, having a pretty good tax bill. They said, what can we do? And I said, do you need to buy any equipment? They go, yeah, actually we do. We need to buy a new x-ray machine and upgrade the thing. And they were like, but it costs like $120,000. And so I'm like, well, and this is right before Christmas.
Oh, gosh.
So I'm like, well, guess what? I'm like, you're getting an x-ray machine for Christmas. And so anyways, they were like, we don't have $120K though. And I'm like, you don't need $120K. So what we ended up doing, they took a loan on it. Okay. So they ended up putting like 10 grand down, ended up getting a loan for the other 110. And then we were able to take $120,000 tax deduction for bonus depreciation. They saved like 40 grand in taxes, and then ended up taking their tax savings, applying it to their loan.
There you go. So they got the machine
you got the machine for 80 grand instead of
right.
120 because of the tax savings that went along with it, and they were able to finance it.
Right.
So you can, we talk a lot about deferring taxes. If they could have spread out the deduction over years or anything like that, but at the time it was like, this is a no-brainer to do this.
Right.
Let's talk about cars for just a second. Can company cars, could we do something like that?
You can do it, but you need to have bigger cars, so they're usually 6,000 pound vehicles and things like that. So yeah, it is possible. There is bonus depreciation on smaller cars too. It's just not 100%.
Okay.
So there's
That's
caps.
what qualifies for the 100%.
18,100 or on SUVs and things like that. So cars are a good one too. Cars are good.
I just can't think of anything else.
I get that question a lot though. Yeah, I get that question. Well, we had a plumber that bought this snaking system that once, and that was like $100. It was like $100 grand to buy the system.
Sure.
Or whatever, and that worked out really good.
So keep that in mind.
So in renovations, I guess there are some things that equipment-wise that you really can buy. So that's a good one that I use a lot. With
anything with the Tesla? We bought the Tesla last year. I know a lot of people listening probably bought Teslas last year.
The credit went away.
I know the credit's gone. Is there anything else?
The credit's gone, but supposedly they're trying to round to some Teslas way over 6,000 pounds.
Ours does.
Yeah.
No, so ours qualifies. Yeah.
Oh, okay. Well, yeah.
I think it's 7,200. No, that's the Hummer. It's definitely over 6.
But if it's a lease, it's different, right?
It is. Or did you lease it?
Yeah.
Mm-hmm.
Oh, yeah, it's different.
Should we have financed it?
If you would have financed it, you could do bonus depreciation. Leases, you got to take like actual costs. So
just the payments.
Yeah,
whatever the down payment was.
Well, you'll do payments. You'll do gas. Well, I guess electric.
Yeah.
Right. And repairs if you have any of that type of stuff. But yeah.
So really, it's financing's the move. It's better tax-wise. Well, right now, because what is that, a change in the tax code?
Yeah, it can be. But not everybody wants to buy them, though.
I don't believe in buying cars, but maybe based on what you just said, I need to change
there might be some. It might be better to do it for tax purposes.
This is a crazy question. Okay, so crazy. I use my car for work.
Yeah.
Okay, but I have to charge it at my house.
Yeah.
Do I get to write off part of my power bill?
Yeah, you got to be able to quantify it, though.
tax hack.
Yeah.
I would say, is there a way to, probably what you would do is say, hey, our bills before we got the Tesla for a year was this much. Now it jumped up on us. So
that's a reasonable thing.
One thing so then you got a reasonable approach to getting like, this is the amount that went for. So yeah, that would be part of that accountable plan reimbursement.
Okay.
That's a perfect one.
Okay,
that you would want to do for something like that. Yeah.
I don't know how much it is, but
I know, $8 a month.
I know, right?
It's actually been really inexpensive.
Yeah,
it's good.
Yeah, I don't know.
I thought that was supposed to go up like $80.
What I always say with the vehicles, though, keep a mileage log. You always want a mileage log.
I told you that.
You need a mileage log.
100%. Every time I get in the car, all I do is work.
Get an app. Get an app that's Mile IQ, something like that, so that you have a report. This is what's personal. This is what's business. Because, I think anytime somebody has a business vehicle and they tell me, hey, it's 100% business. That happens all the time. And I'm like, do you have like 3 vehicles, like, an extra vehicle, really? And then they're like, no. And I'm like, there's no way it could be 100% then. Like, come on.
Right, come on.
Like, help me out here. Like, we don't want to be,
right.
Hey guys, we're going to pause this episode really quick so that we can hear from our sponsors.
I'm Kelly Namiro from Wellness by Kelley, certified holistic health coach and Pilates instructor. I want to quickly pause today's episode of the show to let you know that my private one-on-one coaching container is officially open. I'm only taking on 16 clients in the whole of this year to help women rebalance their hormones and feel at home in their bodies again. My one-on-one is truly for you if you feel like you're chronically fatigued or bloated or have unexplained weight gain, if you struggle with body image and confidence, or if you're running around feeling like your to-do list is running you, pumping stress hormones through you on the daily. If you're unavailable for continuing down this path of surviving instead of thriving, I'm here to support you in getting the results that you want and finally feeling like you're living your best life. Head to the link in the show notes to find out more.
Hey, I want to take a moment to tell you about Battleborn Injury Lawyers. They handle personal injury, which covers everything from auto accidents to wrongful death. You never know when something bad will happen to you or your family. Make sure you have a resource to contact right away if you should ever need it. Put Matt's number in your phone now. He will not let you down. It's 702-570-9000. Again, guys, it's 702-570-9000.
Yeah, I could give you guys more, but I think we're a little low on time. You may need to invite me back again.
I know.
That's a good way to do it.
I like that one.
You don't have one more?
Yeah, I got one more.
Well, give us your best one off your list.
All right, capital gains.
Okay, I like this one. Real estate related.
It can be. Actually, let's. It could be real estate related, but it's also stock related.
Okay. Yeah. And everybody played the stock market.
Yeah, a lot of people played the stock market in 20 and actually did pretty good.
Yeah.
It dipped down quite a bit and then popped back up. But this is like harvesting is what this is called. So let's say somebody sold a property in a year, had a big capital gain. What they're doing is they're going into their stock portfolios and they're saying, hey, let's sell all our losers to offset some of our gains. So that's the conversation that we like to have at the end of the year too. Like, hey, how's your stocks looking? And, if you have a lot of gains early in the year, maybe we sell off some at the end. Or if you have, this is a really good one. Let's say you like contributing to charity. So, a lot of people I'm connected with give 10% to their church. And so, what you can do with stock that's highly appreciated, let's say you killed it on Tesla or whatever last year. You can take your Tesla stock, donate it to the charity. You'll get a deduction at fair market value for that and not have to pay any capital gains.
But it's still a charitable donation,
It's
right?
a charitable donation. No capital gains.
So instead of bringing it in, cashing it in, creating cash, paying taxes on it, and then donating it, you're saying if you're going to donate, you just go straight.
You go straight to the charity.
Maybe we could donate to Galindo Gives, and Galindo Gives is going to pay for the cap.
Yeah, Actually, can we talk about that for a moment? So we do have Galindo Gives, and we do it every year, and we're actually going to switch it up this coming year to benefit cold capping for any cancer patient.
Okay.
So it's a legitimate charity. It's been legitimate ever. Well,
501c3.
That's the thing. It doesn't even exist.
We need to make
we
it
just call it
official.
Galindo
So
Gives.
it's not in a legitimate charity.
Yeah.
Well, the intent is legitimate.
I know. Yeah.
So we need to create that though.
Yeah.
Right? Okay.
Yeah.
And then let's say that we did want to throw $5-10 grand at it each year.
Sure.
That would be considered.
That would be a charitable deduction. You're going to have your own Clinton Foundation.
That's what I want.
Yeah.
And the Trump Foundation.
You'll be like paying for your kids' weddings through your charity before you know it.
Let's be honest here.
I'm playing, yeah.
No, I'm paying for their weddings with what I'm paying them on the W-2.
Yeah.
Yeah.
That's exactly it. See, she's learning.
She's good, Ronnie.
Yeah.
She's a winner.
She is.
All right, that was good.
Okay.
I won't beat that horse. But
Yeah.
what is the it's 50, what'd you call it?
501c3.
501c3. So we need to
Okay.
create a 501c3 during our tax planning this year.
Okay.
Our year-end tax planning. And
Okay.
then we need to fund it with however much we always give every year. What a waste. Yeah, because it was taxed money that we paid taxes on, and then we donated it.
Yeah.
So we got a write-off, but we could have just avoided the whole taxable event.
Right.
Okay, got it. Figured out. All right, Ronnie, that was fun, actually.
Good.
That may be one of my favorite. That was good. That was really,
good.
really good. And I
Yeah.
think it was like tangible nuggets that I think people that, don't do this every day
Yeah.
Right.
can pick up and understand and know.
Good.
So let me make sure I give you, I know we got other plugs for you, but I just want to be sure. Well, you know what? You do your thing, Ronnie. Read your,
You plug yourself.
not this whole thing, but just your website, Facebook. What do you got so people can easily contact you? A little quick phone number, something like that.
Yeah. I love to connect with people on LinkedIn. So, my name is easy to find on there. Connecting with me on LinkedIn is a really good approach. So search for me on there. My website is www.rnwcpas.com. And so check out the website there. You can request a consultation through the website, and I'll sit down with you, I'll talk with you and go through your situation, have you upload your prior tax returns so we can look and see what you're kind of missing out on and kind of go from there. We did that with you guys.
Yep.
Yep.
That seemed to work out pretty well. So
You got a phone number, Ronnie?
Phone number 702-733-2727. Once I really like you, I'll give you my cell number.
That's good. That's the right move.
Okay.
Ronnie, you've been a real treat and a wealth of
Yes,
knowledge, and
thank
we're
you for
very
being-
thankful.
Yeah. Thank you for being here.
Thanks, guys. Appreciate it.
All right.
All right, guys, that's going to do it for today. Thank you so much for listening.
If you enjoyed the show, please rate, subscribe, and share our podcast. You can also connect with us on social media or at galindogrouprealestate.com.
Until next time, thanks again for listening.